Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, March 19th, 2021. They think the purpose of the income tax is to redistribute wealth. It's a fact that the federal income tax allows the swamp and Congress to make huge profits from groups seeking to protect, expand, and achieve income tax benefits. Now, while the swamp and Congress don't want to give up this source of income, another reason they love the income tax so much is that groups in both political parties see the federal income tax as a way that they can distribute wealth, just in different ways. An editorial in the Washington Post discussed the recent $1.9 trillion stimulus bill and many of the tax changes being promoted by President Biden and the people supporting him. Now, some of the points in this editorial were: the stimulus increased the income of the lowest earning group by 20%. It's a start on the giant task of reversing recent decades of upward redistribution of income. Mr. Biden and the Democrats in Congress must start work on a post-Trump tax reform agenda. Now, rather than revenue neutrality, the goal should be to eliminate further loopholes that favor the wealthy and then apply somewhat higher marginal rates to that expanded base. These reforms include reducing or eliminating favorable treatment of dividends and capital gains, eliminate the 20% deduction for small businesses, and increase the corporate income tax rate from 21 to 26.5%. Stiffer taxation on the rich polls well, but it would still be necessary and appropriate even if it didn't, so says the Washington Post. Now, that last statement is a direct quote, and it sums up the feelings of many of the groups supporting President Biden. Interestingly enough, though, the authors of this editorial, and many aligned with the president, seemingly have no concern about a number of unintended consequences. Among them, the economic effects the proposed tax increases will have on small businesses, which, according to the Small Business Administration, create 1.5 million jobs annually and account for 64% of the new jobs created in the United States. The fact that small businesses with less than 20 employees account for 89% of all businesses in the U.S. Now, these changes are going to hit millennials, those born between 1981 and 1994, and also the Gen Zers, that's the 1997 to 2012 group. It's going to hit them really hard because they are 188% more likely to have a goal of creating a small business than baby boomers. 52% of small business owners, when asked about their top challenge, said it was hiring and retaining good employees. Now, expanded and increased unemployment benefits make this a lot harder. Now, many people choose not to work because they can make as much, or in some cases even more money, collecting unemployment as they can working. The new stimulus bill provided that a married person receiving unemployment benefits could have $20,400 tax-free in 2020. A person earning that $20,400 as an employee would pay 7.65% or $1,560 in payroll taxes, and if they were in the 10% income tax bracket, another $2,040 in federal income taxes. So, a person collecting $20,400 in unemployment benefits would have $3,600 more in his or her pocket than someone earning $20,400 as an employee. The unemployed person may very well expect similar treatment for 2021. The economic effects of the tax changes relating to capital gains and dividend taxation apparently hasn't been thought through very well. They don't seem to realize that taxing capital gains and dividends more heavily will result in less investment activity. Wealthy people will not continue making the same investment decisions and just willingly fork over 50% more in federal taxes. Now, basis refers to the value of an investment at the time you acquire it. If you sell it, you pay capital gains tax on the difference between the basis and what you received for it when you sold it. Now, present law allows for step up in basis on inherited assets. This is how that works. Now, say your parents bought some property for $100,000, held it for 30 years, and it's now worth $500,000. If you inherit that property under current law, your basis steps up from $100,000 to $500,000. And then, if you sell the property, that step up in basis will obviously save you a lot in capital gains taxes. Now, many who align themselves with President Biden want to eliminate this step up in basis in an effort to collect significantly more in taxes. Now, there are many other changes, but they all seem to be based on the idea that the smart people in D.C. know best when it comes to the disposal of the assets that we own. Now, of course, many of these smart people have never worked a single day in a real private sector job. Well, of course, except AOC, who worked as a bartender. In conclusion, the intent of this commentary is not to deny that there are arguments out there for the more equitable distribution of the tax burden. However, the intent is to point out that manipulating the present income payroll tax system is the wrong way to do it. When the fair tax is enacted, the smart people can still influence Congress and the president on how money should be spent. However, with the fair tax, it will be us, not them, who will decide how much federal tax we pay. We may not be able to stop the smart people from doling out money in ways that we disagree with, but the fair tax will make it a lot harder for them to bury provisions that benefit themselves and their friends deep within the tax code. And it will also provide a much more stable tax system. We can rest assured that a good decision under today's fair tax will still be a good decision years later. Now, many people label these thoughts currently being promoted in D.C. as socialism and think of it as a relatively new thing. However, the way to make things more equitable economically has been debated for thousands of years. Alexis de Tocqueville, the French political philosopher who lived from 1805 to 1859, wrote extensively about the American experiment. He said, quoting here, "Democracy and socialism have nothing in common but one word, equality. But notice the difference. While democracy seeks equality in liberty, socialism seeks equality in restraint and servitude." End of quote. Now, no doubt the smart people who are promoting these ideas honestly believe that they are simply addressing the inequities in the present system. However, it will be much better for all when the fair tax is enacted and they can no longer get away with providing lucrative benefits for themselves and their friends while attacking or ignoring other large segments of the population. To get to the other side, we must enact the fair tax. By eliminating the income tax, the fair tax eliminates the IRS and the abuses that come with it. With the fair tax, you pay your federal taxes at the cash register when you make retail purchases of new goods and services. No tax returns, no audits. So, if you have friends who don't know about the fair tax, send them to FAIRtax.org. Have them watch the whiteboards under how it works, and then if they agree, ask them to please join us. Then, contact your member of Congress and the President and demand that Congress pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.